Let's get in Pankaj Muaraka, CIO at Renaissance Investment Managers. Pankaj, welcome to the show, and always a pleasure to speak to you at NDTV Profit as well. Hiral on this side. My question to you is, so far in terms of Q3 numbers, where do they stand according to you? Do you think they are better than what the street was estimating? And if so, what would that actually mean for the markets going ahead?
Morning, Hiral. I think it's still early days, but you're right that we've had the big large cap companies across IT and banks who already reported, and we have Reliance who's reported. I think the results are somewhat mixed, and I would still say that they are pretty much in line with modest expectations that the street had going into this Q3 number. So as it is, a result expectations from Q3 is very modest. We're looking at about high single-digit earnings growth on a Y-on-Y basis, and because the base of last year is low. Last year, December quarter, third quarter numbers was bad because by that time the economy had slipped into a cyclical slowdown. So I think by and large, these results are in line. Obviously, two things that are really coming out is one, all the companies have had to make a provision because of the new labor code on their incremental costs that they have to incur, including gratuity provisions. So that's hurting bottom line. And secondly, there's been some impact on margin because commodity prices, especially copper, has had a very steep move in the last 6 months. So that is impacting margins to some extent. And companies have taken tactical calls in terms of preferring for growth at the cost of margins. I think so. I would summarize it that the numbers are pretty much in line with modest expectation that we had. More importantly, the outlook going forward is much better.
So outlook is much better from your own, Pankaj. I would want to pick up a spot news right now in terms of rupee, which has gone past that 91 per dollar mark. What do you make of this? I know somewhere, yes, beneficial to exporters as well, but this kind of movement in terms of the currency, what is the message that you're picking up?
Well, to my mind, probably rupee as a currency has always been overvalued or expensive in that sense. And this time around, RBI was happy to let it go and take that partial adjustment on the currency. RBI was okay with that, given the fact that we do have trade headwinds in the form of significantly higher tariffs that are there on Indian exports to US. So I think probably my understanding of it is that probably 90 to the dollar is a new normal for the rupee, and from here on we'll see a normalized adjustment of the rupee, and it's very normal to see a 2 to 3% adjustment of the rupee versus the dollar given our higher inflation differential. This year has been an exceptional year where the last year, I mean CY25, we've seen an adjustment of about 5.5%, but I think that's an outlier.
Let's stay with us. In fact, let's just quickly listen into what Donald Trump has to say just ahead of his Davos visit.
I don't think any president has had a better first year than we've had in terms of success. Again, we've taken our country from a failure with open borders, no business, everything going badly, terrific inflation, the highest inflation in history, prices that are through the roof. And we've brought prices down. We have very little inflation. We have a great economy. And the prices are coming down still further. But I inherited a mess, and now we have the hottest country anywhere in the world.
Mr. President, do you think that you had any influence on the Giants signing a deal with Coach Harbaugh? How do you think he'll do in New York?
I don't know, but they got a great coach. I like the coach. I like his brother. They came up to see me with about 3 months ago. They came up to see me in the White House. Did you know that?
Yes, I did.
With the mother and father, because the mother likes me and the father likes me, and I think they like me. And he's a great coach, and he's going to do well with the Giants just like...
All right, so these are some of the comments that he's making, among other things, on Greenland, the fact that he does not expect the European Union to push back too much. Pankaj, you couldn't hear all of the comments. Some of what he said had already passed while we were speaking, and good morning to you, Alex, here. Just in the context of Greenland and other things, right, you have these headwinds, geopolitical, that are leading to so much in the way of direction of trade in 2026. And some part of what commodities are doing is also related to that. So how much of your investment thesis at this point will have to depend on geopolitics, in your opinion?
Well, good question, Alex. You're right. Probably this is one of the most uncertain and turbulent period that we are witnessing as far as geopolitics is concerned, because I've not seen such a volatile environment in a very long period of time. And I've been saying that that the world is in the midst of geopolitical wars. We already have few of them going on, and economic war. When the largest economy in the world imposes tariffs unilaterally on all trading partners in the world, it is an economic war. And we haven't seen both of them simultaneously play out in the world since World War II. So we live in pretty volatile time. Having said that, as investors, while we when it comes to building portfolios or picking stocks, not much of this plays into it, because as investors, we are very bottom up and very value-oriented investors. So we look at companies and businesses from a slightly more medium-term perspective, and our objective is to buy companies where we find reasonable value. So but having said that, all these narratives does have a top-down impact in terms of flows and short-term market behavior. But I think it's important for long-term investors to cut the noise, stay focused on companies and businesses, and invest with a medium-term outlook.
Specific comment, Pankaj, on the commodities upcycle, and you've already seen some of these base metal prices go through the roof. I think several houses are divided on precious metals in particular, but also base metal prices, saying that at some point something's got to give. What is your own opinion on prices? Do you anticipate that post Q4 you could see a little bit of a cool off? And how would you look at some of these companies in a positive light as well? Because you would expect that some of these companies will see a bottom line improvement on account of price increases.
Well, as far as precious metals are concerned, I think there is a lot of speculative moves. There is my judgment and understanding of it. So I clearly see some point of time whenever this rally stops, there will be a very sharp reversals because of a lot of momentum and speculative moves there. As far as base metals are concerned, I still think that the price might hold firm in the first half of this calendar year before they start softening in the second half of the year. There, I think, apart from everything, apart from stronger underlying demand, but there has been supply constraint as well, especially with China's new framework of anti-involution, where incrementally China is closing down capacities, and that's now part of their policy plan over the medium term. So effectively, the spillover of Chinese excess capacity, which was happening in the global markets, will keep incrementally reducing every year gradually over the medium term, and that will have an impact on demand supply, global demand supply balances. So I still think that price might hold firm for base metals during the first half of the year before they soften during the second half.
Okay. Pankaj, it's interesting to talk to you even about IT, because you have the top 5 companies that have reported numbers. You have always advocated for a barbell kind of an approach when it comes to IT as a sector as well. With the kind of growth that they're pricing in right now, do you think they will still be able to outperform in 2026 when it comes to large caps versus your mid caps?
Well, I think one thing that has clearly come out of the commentary and the management comments from all the IT companies has been that, well, the spending environment has been sluggish or slow in the last 8 quarters in US, but all of them are seeing that the environment is improving gradually. They're seeing much more deals, client conversations, and engagements are improving. So clearly, the expectation from IT and what these companies are highlighting is that the growth outlook to calendar year 26 is going to be a better year than calendar year 25 in terms of growth. And probably now it's been 3.5 years since the first model of AI ChatGPT-1 was rolled out in November 22. So now clearly AI is getting into implementation phase, and the expectation is probably 27 will be better than 26. So we expect a gradual uptick in IT spends and a gradual improvement in growth trajectory for IT companies going forward from here. And in that context, I think the sector should outperform this year. The sector has been a big underperformer last year. So I think that should come back. It should be a mean reversion for the sector this year, calendar year 26.
Okay, Pankaj, just a final thought on, even in the context of the budget, right? In last year's budget, you had a government that was trying to bolster consumption through various measures, and that led through, even in the GST cut push, that it did midway through the year. In your opinion, has that consumption started? And two, does it get reinforced by budget announcement, or will the budget focus, in your opinion, on other factors?
Well, Alex, the fact is that it's a K-shaped economy. So consumers at the upper end of the spectrum are spending, and wherever they are spending, the demand momentum has held through post the GST cuts and the initial flush as well, especially in autos. So discretionary spends, luxury spends have held through. If you look at travel and tourism has continued to remain strong, and it continues to remain so. What has really impacted consumption is consumers at the bottom end of the pyramid, where they've been really squeezed out because of high inflation and low growth in their income. I think the GST cut did help because it was very significant and meaningful. But what we've really seen is after the first flush of demand, which emerged post the GST cuts, demand is again softened towards the bottom end of the pyramid. I believe that the government will keep stimulating the economy. So I still expect that even this year we should expect incremental fiscal stimulus from the government in the budget. The government is cognizant of the fact that while the economy has recovered from the lows, but we need to sustain the economic momentum and probably accelerate it. And in that context, the government does have resources because our fiscal balances are in a reasonable shape, a reasonably healthy shape, I would say. So I think the government has fiscal room, and I think I would say in this context, at the point where we are, it is not a bad idea to forego fiscal consolidation for a year and really drive growth momentum in the economy through fiscal stimulus, especially at a point of time when we face external headwinds in terms of in trade. It's important to stimulate the domestic economy to drive growth.
So, this becomes your top budget bet from Pankaj Muaraka as well. But thank you, Pankaj, so much for joining us on the show. Running out of time, always a pleasure to speak to you as well.